I just want people to understand that it's a whole lot more than just Trump tariffs or trying to take advantage of arbitrage. We are at a place right now where desperate times call for desperate measures. We have $28 trillion in U.S. Treasuries that are due in 3 years, Dunnigan. Where's gold fit into all this? Don't know, man, but don't be surprised when you're surprised as to what shows its head in the coming days and weeks ahead.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 24th through March 3rd, 2025, while supplies last. Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for pre-33 gold MS62 $20 Liberties at no extra cost. Supplies are extremely limited, so give us a call before they sell out.
Welcome back to Liberty and Finance. We're delighted to have Andy Schectman, the CEO of Miles Franklin Precious Metals, on once again for our weekly market update. We are recording this on Monday, February 24th, in advance of our Wednesday, February 26th go live date. Andy, thanks for joining us again for this weekly market update.
It is great to be here with you. I'm sorry for having asked you to pivot this week and next obligations that I have, but I wouldn't miss our weekly update if at all possible. So thanks for having me on today, a couple days earlier than normal.
Absolutely. And we've had several requests for clarification on some things from viewers. We talked with them quite a bit the last 2 or 3 weeks about semi-numismatic coins, the pre-1933 gold. I just wanted to run down with you some of the reasons that people find that attractive. I think we've sold out almost all of that. The special for the swap deal was very attractive to our viewers and subscribers, and I understand we were almost cleaned out the supply of that. But in general, that's one of the things when explaining to customers who were interested in why there's been such rabid interest in it, in addition to the primary reason that I think you brought it up, which is the price anomaly, the inversion of normal price relationships, there was also several other factors. So I wonder if we can just run through those to help remind people why they might want to consider next time that there's one of these swap opportunities, or consider other swap opportunities to get perhaps out of bars and into U.S. Mint lineage, out of reportables into non-reportables, things like that, and out of things that are usually lower premiums into things that are usually higher premiums if the premiums are compressed close together. Your thoughts on this particular opportunity that presented itself, why it was such a big deal to you, and other similar opportunities that may be like that are still remaining?
Well, you know, and I'm glad you phrase it like that, Dunnigan. I've been doing this for 35 years. And most of my, let's say the first half of my career, with gold under $400, back then an American Eagle gold coin would have cost roughly 6% over the price of gold. So let's just ballpark it at 6%. With $400 gold, that's 4.25 for a gold Eagle. And even if you were paying a 15 or 20% premium for a 63 or 4 grade Liberty, even call it $20 or 20% premium, which is what they were most of my career. On average, a 20% premium on $400 gold is $480 versus $425. So for a $55 premium, you were able to get a coin that was 100 plus years old, that had safety from confiscation, had better upside potential, was a true piece of Americana. Just a cooler thing to own in my mind. And nobody bought gold bullion. Nobody. Until I got to 2008, when it became obvious Obama was going to win. All of a sudden, the premiums went parabolic. And I will tell you that I flew all around the country, as I probably said on your show a week or two ago, for 2 years, buying back numismatics and selling them to the auction galleries like Stax and Spectrum and Heritage. They were paying massive premiums, huge premiums, 60, 70, 80, 90%. And I would call people up and say, look, you know, I sold you 500 of those 63 Liberties, and maybe a 20% premium to spot. I'd like to fly out to your house and bring you 850 gold Eagles. It's never happened before. And what I learned in that trade, which to me, there have been a couple big ones I've done similar to this, in even from Swiss francs into gold and other things, but they all center around one thing, and that is recognizing and exploiting price anomalies. Anomalies, even those that stay in force longer than one would expect, the old market adage, markets can stay irrational longer than you can stay solvent, but exploiting those anomalies really has been, I think, the cornerstone to the success of the largest trades I've ever done. The ones that benefited my clients more than anything. And I think it's the old adage, this time it's different. But, when you talk about historical averages, normally it's not different. We could use silver right now as that example. It's staying way out of whack longer than any of us would have thought possible.
Relative to gold, the gold-silver ratio, yeah.
Context. And I think it is the most undervalued asset as a result of it. But in looking at the numismatics, the reason that I did not recommend them for the entire time that you and I have been talking for over 4 years, other than at one point we did some circulated coins, never went into the uncirculated because they were too expensive. And I have looked at the world as a world that is becoming increasingly more frightening. And I don't say that, I say it in the respect of looking at through my kids' eyes. You have grandkids now. And when you try and, think about what's the world my grandkids are growing up in, we want a world of opportunity and peace and prosperity. And for the last, many years, I think, have questioned what is the reality of that? What are those prospects? And instead of buying coins that were collectible, trading at high premiums, I favored getting as many ounces as possible while at the same time, maintaining your liquidity. Instead of buying a 10-ounce gold bar, buy 10 gold eagles. You're way better off. Anyways, the price anomaly of these premiums coming way back. And look, I bought 11,000 plus ounces of those coins, and you're talking over $30 million worth. And so the price that I was able to offer them to our clients for was ridiculous. I mean, it was much lower than all the competitors, and I could have raised them higher, but I didn't want to do that. I wanted to pass on this opportunity to our clients. And it truly is. I mean, I did it myself. All right. I did it myself with 64 grade $20 Liberties. I traded a bunch of my own stuff for them here recently on this trade. I think it's the best trade I've seen since 2008. I'll stand by that. And there are very few opportunities that I have seen where you are able to buy a 63 or 4 grade Liberty or St. Gaudens for the same price, in essence, as a gold eagle, maybe even less as a gold eagle. That's never happened in my career. Never happened. And back in 08, with a 64 grade $20 Liberty, which would have been very high back then. I mean, usually I focused on 61, 2, and 3 grade to maximize gold content while still getting the benefits that numismatics provide. I would have brought you 90% more gold. And those auction galleries would have bought as many as I wanted to sell them for almost 2 years. And so just as crazy as that was to the upside, this was equally as crazy to the downside. The word opportunity cost means, what is it going to cost me above buying something like an eagle to buy something like this? Well, nothing. Well, I've never seen that ever in 35 years, ever. And so that's why I was so enthusiastic about it. I have learned by doing this for almost 5 years that if you go online and start making statements that are not supported with reality, you end up fading into obscurity pretty quick. I would never do that. And I will tell you again, for those people who took advantage of it, your listeners and mine, it's the best value I've seen in gold maybe ever in my career in terms of premium above melt. And I think markets have a way of doing this. They have a way of moving too far to one direction, correcting, and then falling too far to the other direction before they find that perfect symmetry of where they should be. Now, I know most of what we sold. In fact, I just got a message here. Let me see what they say. We have some, but not that much. Probably not enough to continue the discussion on it. But in a couple of weeks, 11,000 ounces have disappeared, and I think it was overly justified. And I'm thrilled that some of your listeners were able to take advantage of it. I will go down on record as saying I haven't seen something that advantageous to the customer in a very long time, if not ever. So exploiting price anomalies it's been the key. And I can think of 5 or 6 things that I have done throughout the years, all of them centered on identification and fast exploitation of those price anomalies. It's like I often mention, I lived in Minnesota for 50 years and it's funny, I just got an email. One of the golf courses I used to play in Minnesota, it's opening up for walkers only here this weekend, in February in Minnesota. Now, I wouldn't expect, because it's warm enough to walk a golf course in Minnesota this weekend. I haven't looked at what the weather's going to be there, but I did get an email. Pioneer Creek is opening up for walkers. I wouldn't pull out my lawn furniture and start trying to plant, tulip bulbs now, because I know that it's an anomaly. And that's what I mean. So yeah, kudos and congrats to those who took advantage of it. It's as good as anything as I've ever seen.
In addition to the price anomaly that you just enumerated, there was also, you mentioned historical interest. For some people, that's a thing. Also, having talked to Bill Holter several times about this question of what insight he had from his former partner, Jim Sinclair, about inside information from family members who are well connected in the highest echelons of U.S. government, et cetera, is that it may make a big difference when the push comes to shove as far as whether you own U.S. mint lineage coinage or not, and that's a basis that some people are interested in. Another is the reportability aspect. For those of you who haven't already gotten from us the guide that shows 1099B reporting, there's a certain types of products that dealers are mandated, if you sell them back to a dealer, to report buybacks of certain types of certain products to the IRS in certain quantities. We'll be happy to send you a list of what those specific transaction types are if you just email us at libertyandfinance@protonmail.com. That's libertyandfinance, all one word, @protonmail.com. Just put the word 1099 in the title of the email and your name. We'll make sure and get you the list. And the big deal is that people who really want their privacy, they are interested in knowing that if they sell certain products back, there's no mandated dealer reporting. And as opposed to, say, bars, like 1,000 ounces of silver bars or a kilogram of gold bars, these coins, the American pre-33 gold coins, qualify for no mandated dealer reporting, regardless of quantity when you sell them back to a dealer. So it occurred to us, as in the past recently, with premiums having gone in the past so much higher on junk silver, for example, dimes, quarters, and half dollars. Again, that's mint lineage, U.S. mint lineage, face value, legal tender, silver coins that people can still consider swapping out their existing silver bars, for example, that they have, which into those coins. And depending if you stay below the reportability threshold on your buyback of silver bars, there's no mandated dealer reporting. So 1,000 ounces less than 1,000 ounces on the buyback side. And that's another example, is it not, where the premiums are now closer together than they typically are. We've seen during the COVID era, sometimes much higher premiums on junk silver than we do right now. So
yeah, not with that, to what you were just saying, they changed the law recently on reportability, dealer reportability on buyback of junk silver. Dimes, quarters, and half dollars used to be reported my whole career if you sold back 1,000 face or more. Not anymore. It has to be sufficient enough to be able to cover or to satisfy delivery on a COMEX contract. Junk silver does not qualify like a kilo silver bar would, or 100-ounce silver bar, or 1,000-ounce silver bar. And so they pulled it out of reportability in terms of requirements by the dealer. None of this takes away the client's obligation to do the reporting. It just means we won't do it on their behalf. And, that's another example. Not only is silver, historically undervalued, not only is the gold to silver ratio historically out of whack, following the same thing I've just been saying. But these things are happening at a time when the biggest money in the world is rushing and scrambling to acquire physical metal and hold it themselves. I mean, and yet the public is asleep. I've never seen an environment like this ever. The things that are happening on COMEX and the LBMA, it's unbelievable. And it's almost as if this giant Ponzi scheme of rehypothecated gold and silver is coming to an end. And that's what's, interesting. At the same time, you got Warren Buffett, who's sitting on, $334 billion in cash. He has right now $286.5 billion of short-term treasuries. That's 91 billion more than the Federal Reserve has. And this is the greatest value investor of all time, who has no interest in holding securities. I mean, he owns some still, but it shows you his mentality. Everyone is flocking at the Trump trade, and you have the most legendary investor of all time having more cash than just about half of in fact, more cash than all but in terms of market cap. His cash balance is larger than the market cap of all but 30 public companies in the world. What does he see? And why are we seeing such a massive drive to accumulate metal? And it's interesting too, because I asked AI, just for those people who haven't heard this, I asked AI, because everyone's saying, well, there's a whole new thread out there, that we didn't talk about, done again last week, about what I thought this gold coming back was for. And there are people like Tom Luongo who will tell you this is being done to blow up the Bank of England. I'm not saying I believe that or not. It's intriguing that Trump is angry that he found out it was the aristocrats in England that were behind all of these problems with him, with the election, and that he's trying to get back at them by exposing this fractional system in London. And the rumor is that the U.S. banks in London are now long. I can't substantiate any of this, okay? I don't mean to spread innuendo, but if that were true, it would be very interesting. And I asked AI, what would be signs of the LBMA breaking? The first thing it said was widening divergence between paper and physical gold prices in indicating delivery stress. Well, it was at $82 an ounce difference. I don't know what it is now, maybe 30, 35, where, in other words, you can buy a contract in London and sell one in New York and get that arbitrage. Well, that's what a lot of people say that this is about. It's the arbitrage. And I don't believe that. Yeah, it's enticing for a trader to do that, but the cost of shipping it across the globe kind of pulls the incentive away. The second thing it said was reports of delayed deliveries or contract settlements. Well, okay, it's supposed to be T+1. It's now T+8 weeks. And the Bank of England says, well, we don't have enough trucks or manpower. Really? You don't have enough trucks and you're the Bank of England, right? You couldn't just go rent every truck from Ryder and U-Haul and whoever the hell you have to rent it from in London to do this? Don't believe it. They also say, well, some of it is refining backlogs. No, it's not. Because number 4 was major disruptions in supply chains, including mining, refining, or transportation. So check, check, check. And then the other one, number 3, was unusual gold lease rate spikes, reflecting increased borrowing costs for physical gold. They've shot through the roof. They were at 10, 20, 30 basis points. They're north of 6% now. And let's talk about lease rates for just 1 second. I'm a jeweler, and I need this contract, right? I need this gold bar to make my jewelry. And so I buy a contract, and I know that I can stand for delivery. It's going to take T+1 in 3 days. I'll have my gold. What do you mean it's 8 weeks? I have orders. What am I going to do? Well, you can lease a bar from an LBMA member. Now, the lease rates have gone parabolic from 20 basis points to 6%. Well, that doesn't make it very appealing, but okay, I'll do it. So I lease that bar, give it to the manufacturer to make my jewelry. In 8 weeks, hopefully I get my bar to pay back, and I'm made whole. Well, okay, check, check, check. So all of these things have happened. The last one that hasn't happened would be what Tom Luongo is saying, trying to blow up the LBMA and the member banks, and that many are saying that the U.S. banks are kind of flipping the script here and are going long there, which I can't validate. But The last one is banking sector instability affecting LBMA member banks or clearinghouses. So how close are we to a default? Could it really be that is what the idea was to, he says it started with the flipping of LIBOR to SOFR, and that was his signal that this was beginning to happen. And then everything he's done since, draining the gold to silver out of a situation where if we look at give you the number, I often talk about silver, that they have 300 million ounce float trading as much as, they say 290 million, but they say it's 10 times understated. So 2.9 billion ounces of silver off of 300 million ounce float. I couldn't find gold, but I did now. And for gold, they have total of about 279 million ounces on paper stored at the Bank of England on behalf of the LBMA, of which only 36 million ounces are available, right? The float is 36 million ounces against 380 million ounces in outstanding contracts. They're about 90% short on their ability to deliver, but it's just trucks and men, right? So could it be? I don't know. It seems a little bit out there, but Tom, who is a brilliant guy, is basically saying this is his way of, in essence, blowing up this paper scheme. And if we reshore all of the gold here, I don't know. I just want people to understand that it's a whole lot more than just Trump tariffs or trying to take advantage of arbitrage, and the possibilities, whether it be gold revaluation, whether it be blowing up the banks in London who Gordon Brown sold almost all of their gold. So you revalue the price of gold. Well, it ain't going to benefit London, the UK. I know it seems a little bit out there, but I'm just passing on information that I've heard because it's interesting to let your mind expand a little bit and think, because look, we're at a place right now where desperate times call for desperate measures. We have $28 trillion in U.S. treasuries that are due in 3 years, Dunnigan. In 3 years, it's $28 trillion. To get the tax revenue will be under $15 trillion. And so you take all that tax revenue over the next 3 years, even call it $5 trillion a year, which is under that now, and he wants to lower taxes, but give him the benefit of the doubt. $15 trillion, even cut some spending and all that stuff. We owe $28 trillion. So we're halfway there, and that doesn't account of all the debt we accumulate over the next 3 years. We're already at over $800 billion in debt for this year, and it's only February. So the moral of the story is, how do we address this problem? And so, look, desperate times call for desperate measures. Where does gold fit into all of this? Don't know, man, but I think people should don't be surprised when you're surprised as to what shows its head in the coming days and weeks ahead. I think it will be something a little bit more grandiose than what the media is leading us to believe. So,
as long as we have the spotlight on where the physical gold is short, which was London having a hard time getting it out the door, if we could turn the spotlight over to the U.S. supposed stockpile in Fort Knox or elsewhere. According to CBS News, there's only 50% of our stockpile in Fort Knox, approximately, maybe the rest either at the Fed or the Treasury, et cetera. But there's, just in the last week, there was an announcement that both Trump and Musk are going to get to inspect the gold in Fort Knox. That doesn't sound like a thorough and orderly audit if they're just going to walk through and have some optic time there. But what do we know about the gold audit that may be coming for Fort Knox or elsewhere of the U.S. hoard, and whether this scramble, as you suggested, might be also a plausible suggestion, is trying to get our ducks in a row before such an audit?
we don't know a lot about it yet. I hope I'm giving the right credit. I think it was Jan Nieuwenhuis, who's a fantastic writer. And even more than that, he's a investigative journalist. And I think it was him. And if not, I'm so sorry, Jan, but I think it was him who wrote an article about the audits in the past, using the Freedom of Information Act and all sorts of information, that basically said, if you trust the auditors, those that have done this, you're making a massive mistake. And I read the article last night, and it's one of these things you got to read 3 or 4 times, basically saying that there's so many things that contradict what Scott Percent just said, that it's been audited every single year, that they're massive red flags that contradict this, that they need to do a real deep dive audit. That the seals that should have never been broken were broken several times, and there was statements that were contradicting and all sorts of stuff going all the way back to the 70s. The audit needs to be a whole lot more than Elon and Trump walking in to see what looks like. I mean, how the hell do you count, that much gold? You don't. It would take, I've done audits for our Brinks facilities in Montreal and other parts of North America where you have no idea how long this takes and how much time it takes. And even trying to count 1,000-ounce bars on a pallet, it's very hard. I mean, because the way they're stacked and you don't want to double count it. You got to look at the bar numbers. It's not easy. It's a real process. So that isn't an audit as much as it is maybe publicity. I don't know. But I don't think the gold repatriation has anything to do with that. It's certainly a smokescreen. But it's long overdue. I mean, that should be the first step of a real audit that is done independently, third party, and with great oversight. That's what really needs to be done. But I find it interesting because it's been a hot button topic in this industry for as long as I can remember.
I wanted to get your insight on this as well, because you have the finger to the pulse of all of your broker activity and your own as well. We had a testimony this past couple of quarters have been the heaviest we've ever seen in terms of retail buybacks. In other words, people who have been stacking for a long time now seeking liquidity by selling back to us. Rather than the other way around, which is what has predominated in the past. And some, we don't pry, we don't probe, but some of them have volunteered that they're extremely grateful that this was essentially an effective physical savings account for them. Some said, you beat the pants off of what I could have earned from my bank on any certificate of deposit or savings account or whatever, in terms of the appreciation, the value preservation that they've enjoyed by putting their savings out of their bank account and into physical metals. Even now, if they need to tap that for whatever reason, some is to pay taxes, some it's for major purchases of property or a business or medical expenses or whatever, but they still say, as a savings account, this worked exceptionally well for them, and they came out ahead and they came out whole, rather than having lost purchasing power by watching the value of their dollars being destroyed in a savings account. Any thoughts from you on this function of metals as what Rick Rule refers to as volatile liquidity? He said, maintain cash liquidity, maintain bullion liquidity. So for those who have been maintaining bullion liquidity, how it's served your clients and others of your brokers' clients as well.
I've told you on your show 1,000 times that my story of the promise I made to my dad, buying something every 2 weeks for now 35 years. Best gift I've ever been given, to learn the power of compounding, of time and of interest and all that kind of stuff. But I've never once looked at gold as an investment. Yeah, I'm very cognizant of its appreciation, which has been, I remember when gold was $250 an ounce in early 2000s. But to me, gold is wealth. Gold is wealth that has continued to appreciate forever. I mean, go back as far as you want. You'll see that it's kept pace with the cost of living, and in many cases outperformed it. To me, that's what it is. It's wealth that if you need to use, you're darn glad you have it. And too many people focus on gold as an emergency hedge, as a catastrophe hedge, as the sky is falling hedge. Sure, I mean, I guess you could say it does that too. But to me, it's wealth outside the system that is private, that I can give to my kids if I don't need to use it. And if I do need it, I'm darn glad I have it. And in an environment where not only are we lied to about inflation and money creation, as we're told it's 3% now, but John Williams would say, put an 8 in front of that. And so you're at 11 or 12% inflation. So they lie about that. The dollar is continuously being devalued. And in a world of over-leveraged, undercapitalized banks, in a world of inflation and dollar debasement, that's what gold is. It's wealth, and it's there when you need it. It's immediately liquid, and it's universal. So I can't think of a better explanation of why to hold it. The only caveat I would say is that when someone calls me and says, look, I'm buying a house in 8 months, should I do this? I typically say no, because there's too many variables. I would say buy a 6-month treasury right through treasurydirect.gov and remove all of that risk. But if someone says, look, I have a lot extra money, I don't know what to do with it, I want to put it somewhere safe for the future, yeah, there is no better place to put it in my mind than an asset that is continuously, since 2000, it's averaged 9.9% per year. Compounding was up almost 30% last year. And this so far this year, it's up 8 straight weeks in a row. There hasn't been a down week yet. Doesn't mean it will always do that. It just means that what gold is a vehicle to maintain your standard of living. And we can go back to, 30s with Roosevelt, go back to Roman times, and there's always those analogies, and they are true. You go back to the 70s, in 1971 with $35 gold right when he closed the gold window, a 100-ounce, COMEX gold. Look at a 400-ounce gold bar from London in 1971 would have been $14,000, and today, with gold at $29.51, that bar is $1,180,400. Did gold go up, or did the dollar lose all of its value? And I say, in 1963, when my dad graduated college, he was making under $6,000 a year, and he said, your mother and I could live comfortably on that, just the two of us. We were married then, he said. Well, how the hell does anyone live on $6,000 a year? Well, back then you could. Did the dollar, or did the cost of living go up, or did the dollar go down? So in essence, what this is insidious, continual inflation eroding the value of the dollar, and gold finds a way somehow to maintain your standard of living. In some cases, accentuate it. So you don't buy gold to become wealthy; you buy it because it is wealth. Better than holding it in a bank these days. That's for darn sure.
Another use of gold, in addition to just out-of-the-bank liquidity preservation and purchasing power preservation that many of our clients have talked to us about, there's been a lot of interest in whether people can get out of the market in their IRAs and 401ks and get into physical precious metals. We've talked about that sometimes. We've also talked about, please be careful of what company you deal with if you're getting into an IRA, because there are some rather gloriously bad examples of ones that will prey on people and upsell you and oversell you, things that are not competitive and that sort of thing. But here's the question that many of them ask. In terms of privacy and counterparty risk reduction, what things should people be thinking about regarding physical precious metals IRAs if they really are interested in privacy, and if they're interested in eliminating as much as possible both counterparty risk reduction, but also government potential, future taxation, et cetera, and government intrusion into their private financial lives?
Honestly, Dunnigan, when you're in an IRA, I don't know what options you truly have. Anything you do is being reported to the IRS. That's what the custodian's job is to do. The only way to do that would be to start taking distributions of the metal in kind, in my mind, and get it out of the system. When you're dealing with an IRA, you are part of the system. You're in the matrix. And like I told you before, in 2009, after the great financial crisis, there was a bill that was floated all the way down to the House floor, was rejected, but it talked about taking IRA money, if there ever was another great financial crisis, and converting it into everyone's IRAs into like a guaranteed annuity of sorts backed by treasuries to stabilize the treasury market, to stabilize the dollar. And so you're in the system. And in fact, a custodian is, if I understand this correctly, is the owner of the IRA. You are the beneficiary of all the income. So until you leave the matrix, you're part of the game. So, I think the way to do it, if I were going to do it, I have found that New Direction, and I don't get paid or have any dog in the fight. I work with all the custodians, and to me, they're the only ones that have earned my respect enough, because quite frankly, most of them suck, and suck worse than others. Some have made me so angry I've lost my mind, but they have proven to me to be the best, and I have faith and confidence in them, and you always want to choose a depository that physically segregates your metal. But remember, you have the ability to stand for delivery in your metal as a distribution or liquidation. And it's a taxable event. But in reality, that is the only way to increase your privacy and to remove counterparty risk. In the meantime, when you're in the IRA, you must choose a depository that physically segregates, not just allocates, right? Allocate is all the metal from this IRA custodian is held in this bucket. No, I want Dunnigan's bucket right here, and Andy's bucket right here, and Jim's bucket right here. It has to be your own name. It has to be physically segregated, not just allocated. And so that is the only way. But truth be told, it is a great way. It is a great way to make a bigger splash in the gold pool. But understand, if you ever sense anything's about to get a little bit untoward, shall we say, the ability to stand for delivery and take possession and pay your taxes is never a bad idea in that scenario.
We have one last question that has been submitted by a client ahead of this interview, and that is, they said, like Gregor Manarino, for one, always talks about being your own central bank. And we've talked a lot about banking risk. Alistair McLeod, former bank director on our channel, has talked about systemic risk in the banking system. We had Janet Yellen in testimony before Congress being grilled by the representative from Oklahoma, he said, why did you deviate from the Dodd-Frank rules? She said, well, we deemed there was systemic banking risk. So, and we have that leaked video from the FDIC meeting saying there will be runs on the bank, but we probably shouldn't let this out to the public. We should only let this out to the bank so they can make plans, because we wouldn't want unintended consequences. So having all of that concern about banking risk, the question is, how do you become your own central bank in a realistic operational? How do you actualize that? And I know we had Glint on our channel talking about how that's one way you can do it. You could put your cash into a Glint card, and then you got it into gold, and you're preserving your value in gold, protecting it from inflation, and it's in a vault in Switzerland, and you can spend it at the coffee shop and nobody knows the difference. But any other thoughts from you on how people can put action behind that sentiment of, gee, I'd like to be my own bank rather than being in the banking system?
If you're in the position to do it, God bless you. And you keep enough money in the bank to pay your monthly bills. And if you need to sell gold and silver to add to your cash stash, you can do that. A Glint I talked with Jason about that today, the CEO of Glint and the founder. To me, the real utility in Glint is just what you said. I got extra money and I use it for certain things, but I don't want it in the banks that are wickedly over leveraged and undercapitalized. And I think too many people have let that problem go by the wayside, and it's not resolved yet. I think there'll be more bank failures. So keeping it in an account in Zurich rather than in a bank account here in the States is not a bad idea. But look, how do you become your own annuity? How do you become your own bank? How do you do all of that? You do it by accumulating assets and like gold and silver, which then can be monetized if you need to. It's keeping it out of the system. It's not an easy thing to do, and it's rather unconventional. I am not the poster child for Finance 101, and quite frankly, neither are you. But yet, I would argue we probably both sleep well at night, and our portfolios have probably done better than most of the index funds, certainly better than the S&P, much better, and without the counterparty risk. So, you're your own bank. I'm my own bank. If you are doing that, it's important, I think, to have a good portion held in a depository to give you immediate liquidity. And you don't want to have, your house filled with gold and silver, security risk, and those kinds of things. I mean, you can have some, certainly, to whatever degree that makes you feel comfortable. But our Brinks programs are a perfect vehicle for that, where, I have a lot of people who have a lot of metal in Brinks, and they'll say, I need $100,000 this week. Please sell 40 ounces of gold for me. Done. Bang. And we wire them their money. So in essence, they are their own bank. But in a world that is becoming far more complex, far more interconnected, the term you use is systemic, it becomes a challenge, but it's not a bad idea. I think that breaking free from the traditional norms of what is normal, what is conventional, is something I've never had a problem doing, and it's typically worked out well. I think it means trust your gut. And if your gut tells you get the hell out of the system, then do it. And to whatever degree that means. But in terms of liquidity, if you have the ability to keep, let's say, a certain percentage, whatever that amount means to you, in a depository where you have immediate liquidity physically segregated, like in one of our Brinks depositories, yeah, you would then have instant liquidity within just a couple of days at worst, where we can wire you your funds once Brinks moves the metal, rather than leaving it inside of a under capitalized, over leveraged banking system where, the fractional reserve system is that if everyone runs to that bank to get their money, just a couple will get it. That's just like we're seeing on the LBMA right now. That's just like Bernie Madoff. It's a scam. And it is. And yet no one's ever done that, because usually you don't see a run on the banks. But are we watching a run on the LBMA in real time? Does that maybe open people's eyes? Maybe we're not. Maybe we are. Only time will tell. But it's this type of what we're seeing certainly could be, looks like it could be, and we'll see how it all plays out. But I don't find those kind of decisions crazy. What I will tell you is that if you are one of the people who wants to do that, don't go to anyone mainstream and tell them what you're doing. They're going to lock you up. I mean, again, people would think I'm crazy for doing what I've done, and I've done it for over 20 years. And I've never missed a minute of sleep, and I've turned out just fine. Trust your gut. And in the end, you only have yourself to blame. So I think these kinds of decisions that are unconventional, even though it makes sense to you all, and a guy who said that probably is fairly well read in this type of information, instead of the people like an advisor who's well read but reading the wrong stuff, reading stuff that would tell you it's all about the Keynesian experiment, which many of us believe are coming to an end. So it's one of these deals where you're going to have to go it alone and trust your gut. Everything I've done since I was a young man, I've done alone, because the advisor would say, A, you're nuts, and B, I don't want to work with you because you're a risk to me. Or, I don't like that kind of deviation from protocol or from what's normal. But in my mind, it is normal. And it is normal to be your own bank and to be your own retirement account and to rely on no one but yourself. I think it's always seemed normal to me. So I would tell that guy to go ahead and do it and trust his gut. And certainly, Dunnigan and I are here to help foster you to get through that. It's not as crazy as it sounds. Even thinking it sounds kind of crazy, but when I think about it, that's me. That's what I've done for a long time, and that's you. So not so crazy after all.
Just as you mentioned, it may be true that most retail financial planners would steer you away from something that they weren't trained to sell, or that their bosses won't let them sell, because it is funds leaving under management. But I have multiple personal financial advisors and money managers who do refer their clients to us for augmenting their participation in the market outside with metals in their own possession. So
for any of your clients who have done that with you, my congratulations. You're dealing with the exception to the rule. And that's not a knock against financial advisors. It's hard to run a financial advisory where money under management is how you get paid and everyone is leaving your management services. That is a real advisor, and a real advisor who cares about his client base. That's someone I'd work with. That's someone who I think is a good person, not just a good advisor, because just because he or she can't help you achieve this, the fact that they are recommending it tells me they deserve the accreditation and the namesake of being an advisor rather than an order taker or a rule follower, or, because the conventional rules that we have seen, I think, maybe the rules need to be questioned a little bit. So yeah, no, that's cool. I like that.
Well, Andy, we're always grateful for your presence here. We're going to need to wrap, and just grateful for this weekly market.
I need a friend. Come on.
Well, all of our viewers are grateful for your presence. And am I. So thank you, Andy, for being here again.
Yeah, everybody.
Weekly market.
Thank you. I will see you next week. And God bless to you and everyone else out there. Have a good rest of your week. And things are going to get nuts, man. So don't be surprised to be surprised. Something's coming. Don't know what, but it'll be fun to talk with you about it as they unfold. So you have a great rest of your day, buddy. Talk to you soon.
You too, Andy.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 24th through March 3rd, 2025 while supplies last. Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for pre-33 gold MS62 $20 Liberties at no extra cost. Supplies are extremely limited, so give us a call before they sell out.